Good morning, everyone. My name is Huo Yihao. My metric number is 231947. Today I will be presenting my stock analysis on semi-Dabe plantation Bahad, also known as SDG. So SDG is the world's largest palm oil plantation company. Its main business is very straightforward. The company plants oil palm trees, harvests fresh food bunches, process them into crude palm oil, and then sells the products locally and internationally. Most of its operations are located in Malaysia and Indonesia, which are two major palm oil production countries. Because SDG owns a very large bank and has its own processing facilities, it operates an integrated business model. This means it controls most parts of the production process, from plantation to export. Overall, SDG is not a fast growth company. Instead, it is more known as a commodity-based company with stable operations. So now I will move on the key financial numbers. First, let's look at revenue. Over the past 3 to 5 years, SDG's revenue has been relatively stable. There are some ups and downs, but no extreme changes. We can see on 2020, the revenue is about 20 billion ringgit. For on 2021, the revenue is 21 billion ringgit. On 2022, the revenue is about 23 billion ringgit. On 2023, it's about 21 billion ringgit. On 2024, it's about 20 billion ringgit. So this shows that demand for palm oil is still there, even during weaker economic periods. However, when we look at profit, the pattern is quite different. SDG's earnings are more volatile. Some years are strong, while some years are weaker. The main reason is that profit depends heavily on crude palm oil price. When palm oil price increases, SDG's profit improves. When price fall, profit declines. So on 2020, the profit before tax is about 3.3 billion ringgit. On 2021, the profit before tax is only 1.2 billion ringgit. On 2022, it's a most. The profit before tax is about 3.5 billion ringgit. On 2023 is 1.5 billion ringgit. On 2024 is 2.3 billion ringgit. And next is assets. SDG have very large total assets, mainly for plantation land, mills, and processing facilities. This tells us that SDG is a capital intensive business. It requires large investments, but it also creates high barriers for new competitors. The total assets on 2020 is about 20 billion ringgit. On 2021 is 23 billion ringgit. On 2022 is 25 billion ringgit. On 2023 is 28 billion ringgit. On 2024 is about 30 billion ringgit. In terms of dividends, SDG has been paying regular dividends, even though profits tilted, the company still aims to reward shareholders. This is why SDG is often seen as a dividend and income stock rather than a high growth stock. The dividend per share on 2021 is about 9 cents. On 2021 is 10 cents. On 2022 is 15 cents. On 2023 is also 10 cents. On 2024 is about 11 cents. So then I will talk about the future growth and risks. For growth, SDG's main driver is global palm oil demand. Palm oil is widely used in food products, household goods, and increasingly in biofuel. This supports long-term demand. SDG is also focusing on cost efficiently, such as mechanization and better plantation management. It helps reduce reliance on labor and improve productivity. Another important factor is sustainability and ESG. SDG is investing in certified sustainable palm oil products. This is important because many international buyers now require stricter environmental standards. However, there are also key risks. The first risk is palm oil price volatility. Because SDG is a commodity-based company, it cannot control market price. This makes earnings unpredictable. The second risk is rising labor and operating costs, which may pressure profit margins. The third risk is environmental regulations. Stricter rules may increase compliance costs in the future. So, what is my final recommendation? In my opinion, SDG is suitable for dividend investors and investors who want exposure to commodities. It is also suitable for long-term and conservative investors who prefer stable companies. However, SDG is not suitable for short-term traders or investors looking for faster growth because earnings depend heavily on commodity cycles. Overall, SDG offers stable dividends with cyclical earnings. It's not exciting, but it is reliable for the right type of investor. Thank you.